everyone, this is Rob Roy. We just finished the live U.S. market update over on the Hub Financial channel. You're watching the recording on the EWO channel. We talked about the CPI and PPI reports that came out this week, how they affected the markets. We talked about JP Morgan's earnings, even threw a little Fed talk in there with the ECB perhaps moving on pause. If you'd like to join us live, go over and subscribe to the Hub Financial channel, and you'll be notified each and every week when one of these live broadcasts comes out. Please leave a note underneath the comment section of this recording with your viewpoint on where you think the metals are going to go. That was the question of the day. And a quick reminder, if there's a specific stock you're interested in, you can go right to it based on the chapters feature in the video. Thanks for watching. Take care, everybody. Hi, everyone, and welcome to this week's U.S. market update. Taking a look at the chart of the SPY, you can see that bit of a move to the downside today after kind of rocky back and forth, but still making higher highs throughout the day. So the trajectory is still to the upside. I know based on last week's broadcast, the fact that we're talking about the market going higher, there's a lot of people that are expecting it to go to the downside and aren't in agreement with the move to the upside. But the market's doing what the market's doing, and we're just here to read the charts as we see them. So, but what ended up happening today, or this week, is as we move to the upside here, you could see this downward move that occurred on Wednesday, and that was when the CPI report came out. You can see that it did come in a little bit better than expected, and the market kind of brushed that off and went to the downside. And there was a lot of commentary on the financial networks. Well, if inflation is slowing as the Federal Reserve wants, why didn't we continue back to the upside on what was perceived to be is pretty good news on the inflation front? But that's the consumer price index, and I think there was still a little bit of doubt left in there. This is just my opinion on waiting for the PPI report, which came out on Thursday. And the PPI report on Thursday comes out. Also came back to better than expected, lower inflationary numbers, and the market turned and rallied back to the upside. So the exact opposite of what happened on Wednesday. Why the difference with these two primary inflationary reports, both kind of in the same area as far as slightly better than expected? My opinion, for whatever that's worth, is the doubt that was left after the CPI report is they still wanted to see the PPI. What are prices at the wholesale level? Because if wholesalers are still having to pay more, if inflation is still hot on the wholesale level, but the consumer price index is coming down, perhaps the consumer is backing off a little bit, tightening the belt strings, maybe not spending as much, and so prices have to come down, that compresses margins, which would affect earnings coming into the earnings season. So I think there's just a little bit of, okay, let's wait and see how this wholesale price level comes out. And then there was some relief when it showed, okay, it's down as well. So that leads us into today. And today we will talk about JP Morgan's earnings later on. A lot of people were looking at that. And then we had a pretty good open, big rally. Immediately sold off, then a little bit of a tick back to the upside to end the day. But as you can see, that we still finished above the 10-day moving average and holding and closing above 410, which we've been talking about this level for the last couple of events here. Doug, so where the 410 level, I think, is an important level. If we can hold here and move back to the upside, then I think we are in line for this zigzag pattern, which I know some of you are not in agreement with. You've made your voices heard loud and clear on that. But again, we're just reading the charts and showing you what they say. And this zigzag pattern with the 100% fib extension up there around 435 or so. And then we also have within that C wave, another zigzag pattern where we could move up into 425 or so. But getting away from this, because we've showed this zigzag pattern so many times, the key here is we've held above 410. We'll see how we move into next week as we move into earnings season. That's going to be a big key. Obviously, there's a lot of expectations that perhaps we're going to see some not so good earnings. We're going to see the start of this potential recession that people have been calling for, and that the inverted yield curve, which is still inverted, although not nearly as bad as it has been. I'll bring up the chart of the yield curve real quick, and you can see that it's still inverted, but the 2s are down here and the 10s are here, so it's not nearly as bad as it once was, but it's still inverted. And perhaps as the earnings season plays out, we're going to start to see some effects of a consumer maybe not spending quite so much, and the fact that we're going to begin to have a little bit of a recession, if not a more significant one. All right, that's enough on the S&P. Let's take a look at the VIX, and we'll look at some of the other indicators and markets. And you can see with the VIX, we have broken down below these levels here, 18, 19. And if you are bearish, then that's something that would concern you. Literally closed at 17 and change here, as you can see today. Yeah, some winding of the spring, if you will, with breaking below those levels, and the fact that we could get this big explosion back to the upside on the VIX, I think is keeping a lot of bears and shorts feeling like, okay, the market hasn't been going our way yet, but it's coming. Look at the VIX breaking below here. Can it go lower than this? Well, yeah, it's been down to 16, it's been down to 12, even broke below 10 in recent years. However, more recently, 18 or 19 has acted as support, and you have to pay attention to that. And the fact that we're breaking below that level, is that stretching the rubber band, winding the spring, whatever analogy you want to use, for a potential explosion back to the upside, which could be set off by worse than expected earnings, and earnings I think are already not expected to be great. So there's a little bit for everyone here, I think, in the market. If you're bullish, the patterns look pretty solid. Volume's been pretty good. If you're bearish, you can certainly hang your hat on that VIX is really low, and the likelihood is the VIX is going to be moving back to the upside. So looking at the TNX here, bouncing back to the upside on interest rates, I think that's interesting. Just when it looked like we were going to maybe have an issue here, breaking below 34. I didn't like that, as you know. I was concerned about not just that, but the fact that it kind of went boom, straight down through it. I didn't want to see rates drop significantly to the downside on this vertical move. And the reason for that is that would indicate a lot of money coming into the bond market. Where's it going to come from? Probably from the equities market. Another argument here to the long side of the markets is there's a ton of money in money markets. So that's got to go somewhere. Is it going to go into the equities market? Is it going to go in the bond market? I guess we're going to find out here over the next couple of weeks by the look of that big ascending triangle on the SPY. But the fact that we didn't continue down here, price and yields moving opposite directions in bonds. So there's not money, at least not right now, flooding into the bond market, which leaves room for money to move into the equities market. I think that's key. And then we look at the dollar. And Dux, you mentioned that SLV has been hot lately, and we are going to look at that chart here, not too distant future. And here you go. The dollar weakening here has put a bid under the metals, so I do think it warrants taking a look there. So they're looking at the dollar moving to the downside. That's pretty key. So let's take a look at some of our other indices, and we look at the DIA and to see if it's moving back, and it's run into resistance there at 340. Put the Elliott wave pattern on. No 5-wave pattern there either. So neither the SPY or the Dow has a 5-wave impulse pattern. They're in corrective mode. And here again, you can see there's a zigzag pattern to the downside. Then we had that little triangle right here. And then we broke out and we've run right back to resistance. And so this is a very logical point, in my opinion, for the Dow to pause. We had gotten a little bit overbought, a little separation from the 10-day moving average. So with that, go sideways, let the 10-day moving average catch up, and then maybe we take a run at breaking above 340. If we do, I think we're off to the races on the Dow. I mean, that's clean air, the racing analogy. When you're running out front, you're in clean air. Your engine performs better. When you're in the middle of the pack, you got everybody else's hot exhaust and tire things hitting your engine, and your engine runs a lot hotter, tends not to perform as well. So getting in that clean air, you break above there, I think we could really have something, but it has to do it. And there's a lot of resistance at this 340 level from November, December, and January and February as well. So here we are right back to that level. And is there a possibility that 340 holds and we move lower? Of course, it's got to break that level before you get too excited about a move to the upside. So I think if you're a fan of trading the Dow, you're simply sitting on your hands, and let's wait. Let the market tell us where it's going to go. There'll be a great trade to be had, whether it's to the upside or the downside. And then we take a look at the Qs, and okay, the Qs cooled off a bit, but you could make an argument that, yeah, they've gone sideways here after a really nice run. They're allowing the 10-day moving average to catch up. We did close back above the 10-day moving average both yesterday and today. And I go back and remind you about rates. We've actually had a tick up in rates here towards the end of the week, and yet the Qs have hung in there pretty well. So I think even though nothing too exciting out of the Qs this week, constructive at least that we have held above the 10-day moving average, above that previous wave 3, and we're trading just below that wave 5 target. So a little calm before the storm, perhaps. Could that be the end of the wave 5? It could. It's gone 67%. That could be all it gets, and then we start to move down towards the previous 4, which would bring the Qs all the way back down towards this 280 level. So I think you have to watch here too. So I think the prudent thing, my conversations have been cautious optimism is what I've been talking about. And we've talked a lot about this in TradeFinder. And Brendan, I know I'm probably throwing you off a little bit here, but if you wouldn't mind putting up that shot of TradeFinder, I'd love to have everybody take a look at this and consider joining with us, because cautious optimism is what I've been talking about for the past couple of weeks, and we have really come up with some great case study considerations, we call them. We look for trade ideas during TradeFinder. We do it every Tuesday night at 9 p.m. Eastern time. We talk the markets, we look for trade ideas, and we have a live Q&A at the end. It's a lot of fun. It's free. So sign up and join us for next week's TradeFinder. But that has been the theme of our recent TradeFinders, is cautious optimism, and I think that's prudent. I think that's where we stay with things. You have to respect where the charts are, but you also have to keep in mind it's precarious, right? There's a lot of things, earnings coming up. Is there going to be more bank news? Warren Buffett even came out and said he didn't think we're done with bank failures. The Fed's lending facility, I believe, has really softened that. We talked a lot about that in this week's TradeFinder. I think, my opinion only, that we would have had a lot more regional bank failures had the Federal Reserve not done that. We don't know how many banks have gone and taken advantage of that and borrowed money from that lending facility, that window opening, and allowed them to shore up their balance sheets without divulging, hey, we're having a problem or we need to do that. We don't know. We don't know how many have taken advantage of that. And so I think they helped it along those lines. So that expanded their balance sheet. And with that, that's been helpful to the markets. So yeah, it's an area of time here, I think, where you just have to go with what you see on the charts, but be very cautious regardless of what you're doing, that things could turn in a moment's notice, especially with the VIX at 17. So looking at the IWM, moved back down today, but we have moved back up off that 170 level, getting up to 180. But look what happened. We hit the 50-day moving average on the high. So at least we started to put a little distance away from 170, where the IWM had not been following suit, had not been playing well with the rest of what was going on in the markets. But talk about playing well. Let's look at this chart here before we get into some of the other foreign markets. How about Bitcoin? And we were having a chat amongst ourselves about this beforehand. Just nice move to the upside here on Bitcoin. Extremely impressive, in my opinion. I've noted many times that I don't like it when things go vertically to the upside, but if there was ever a chance for a vertical move to hold, because I believe that vertical moves often get retraced, more often than not get retraced, but to go sideways for a couple of months and then we go into this really tightly formed triangle. What does the triangle do? It breaks out, and the breakout was to the upside, where it could have easily been back to the downside, in my opinion, and filled some of this vertical move, but it didn't. It moved higher. So is next stop 32,000? I think it is. Is this the start of the rally that's occurred the last 3 times? Bitcoin has gone through one of those halving processes, which we expect to happen at the first quarter of next year. Historically, that's what's happened. So maybe that's underway. Again, cautious optimism, because I think you got to keep in the back of your mind now, not just this one vertical move, but now we have another one. That happens out of triangles, so it's not a surprise that it went vertical again. But boy, enjoy the ride if you're long Bitcoin or the currencies. But again, be cautious of things could snap back in a relatively short period of time. So just a couple international markets, and then we'll move on here from the charts. We can take a look here at the EWA, and the Aussies came back just a little bit today, had been making a nice move to the upside, but we talked about this last night in our insiders meeting, which is for our subscribers at ewotrader.com, subscribers only on Thursday night, and we were a little bit overbought on the EWA and said, hey, a rest or perhaps a little bit of move back is likely in the cards, and that's what happened. But see, we're still above the 10-day moving average, even on the move lower. And we do have a really nice zigzag pattern formed here. We also hit the 61.8%, Fibonacci working again, 61.8% fib level. And then with this 61.8% B wave correction, you would think that the EWA ends up around 24 is where you would expect that move to occur. And then taking a look at the EWC for our friends above the border up north, and you can see that held in there really well today and still above the 10-day moving average. So we are a little bit overbought on the EWC, and we're also nearing a major point of resistance. So here, I think some caution if you've ridden this move to the upside. Enjoy that. But I think, there's a lot of overhead here to get above 36. We'll see how that plays out. But when you take a look at this zigzag pattern there, that should go to 61.8, and look exactly where the 61.8 is. So you get a 38.2% B wave correction. You're supposed to go to 61.8. Happens to be exactly at 36. How about that, Dux? Can you nail that anymore? That's amazing that fib level lines up exactly with resistance. So I think caution on the EWC as well. The INDA, this move to the upside has been pretty spectacular, just straight. I love the 45-degree angle, but way above the 10-day moving average. So overbought here as well. Little pullback as normal. The key here is we need to hold 40. So if you like the INDA, if you're long the Indian market, you would love to see this hold 40, because you have to respect the fact that we still have a qualified 5-wave to the downside pattern. So perhaps this move from the 3 to the 4 was nothing more than the wave 4 correction, and then we're going to head lower. That's still got to be in the back of your mind. We'll find out a lot about that by how it handles 40. If it breaks back down below 40, breaks back down below the 10-day moving average, perhaps we're heading down here towards that wave 5 low. But if it can hold 40, then perhaps we can hold this, bounce up, and maybe disqualify this 5-wave pattern. It looks really good. And then our friends in Germany that have been really flexing here lately with their market, and who can blame them? This I thought was really impressive. This is more like how things usually go. You had this big vertical move up and then consolidation. Then we pulled back. So there's the give back of some of that vertical move, which I note that happens so often. That's why that's in the back of my mind on Bitcoin. It just does that a lot. As is exactly what happened here on the EWG, and held the top of the wave 3 exactly where you would expect it to hold, and it's turned and run back. We've made a new wave 5 high. Note that it did not label a new pattern. This is a continuation of the wave 5 before. Just a spectacular looking upward pattern on the EWG that could go as high as 100% extension. But yeah, very impressive move there. Well, yeah, bang is exactly the way you'd word it here, with JP Morgan running significantly back to the upside here. And a lot of people, we talked about that in our insiders last night as far as what was going to happen with JP Morgan with their bank earnings. And had there been disappointment here with you could argue that they're the biggest of the big. Some may argue that happens to be my opinion. I think they're an extremely well-run bank. There's a lot of other stuff we can get into, but I was really interested to see how this played out, and they just nailed it. They nailed the earnings, and they cited the higher rates has been helpful, and big move to the upside, which is what led into that early rally, on top of the fact that we had news come out on the ECB. I believe, Brendan, you may have a chart there as well on the ECB. They're also talking about pausing on rates. So we've had Canada that paused, then Australia's paused, and now the ECB is considering pausing. Is the Federal Reserve going to do that? Could that be the catalyst that moves to the upside? Or are they the outlier? With all the rest of the world pausing, does the Federal Reserve continue to raise on May 3rd? And that upsets the apple cart, and that's what starts to lead us lower and creates a spike in the VIX. You can see both of those scenarios playing out. So how the Federal Reserve follows what these other central banks are doing, I think, matters a lot as we move forward. But yeah, you're right, Dux. That's a pretty good move to the upside. Unfortunately for me, it gapped up. I don't like gaps. Gaps at some point get filled. They don't always automatically or immediately get filled, but based on significant research, 94% of gaps eventually get filled, but it could take time. And so some get filled right away, some don't. So what do you make of that with the fact that not only did we have the big gap up, we did come off a lot of support there at 130, but we're basically already at resistance here at 140. It's kind of no man's land for JP Morgan, but it certainly, I think, calmed the markets a bit to start off the trading session until that move got sold into. But yeah, that's the definition of a bang there. That's pretty impressive. Yeah, how about that? It's this week-to-week type of thing here. You have to wonder, how much they knew, how much that was playing, because the news that came out was that they're having trouble with one of their suppliers, one of their parts suppliers, and they didn't get super detailed on what the problem is. So we're kind of left to figure out what all that means. But yeah, turn around, right back down. And right when Boeing needed to be able to break higher here, right? They needed to be able to break through this area, really above 220, I believe is what we were chatting about last week. And then you're probably off to the races with Boeing. Not so fast. Now we're back down here and we're looking at the exact other side. As you said, Dux, now we got to see if we can hold 200, which is going to be very important, equally as important. And so between 200 and 220 was kind of no man's land here with Boeing. So no break above 220. Now we don't want to break below 200, because if we do, then there's a little congestion right through here between 180 and 200. But there's that vertical move that occurred between 140 and 180 back the end of last year that could be in danger if we can't hold 200. So that's a big if, because we didn't break it today. So we closed right at 200. So we still have the opportunity to hold this level, regain some things, and try to move higher. I think the market's going to want to wait for a little more detail on exactly what that news is. But yeah, good call on that one, Dux, on just a major flip-flop. Fish out of water there is what Boeing reminds you of right now. It's been a powerhouse with that move to the upside. Has just been amazing. My own son is a big, huge fan of Nvidia, and we talk about it all the time. So Nvidia is always on my radar screen. Pretty impressive hold here above 260. So it made this nice run that we've had. We do have this wave 4 projection here, but remember, when the software shows this, because this confuses people at times, it doesn't mean the wave 4 is underway. What this projection means is if the wave 4 were to start, that's where you could expect it to find some support. It's still colored green. Note that the other waves that are finished are colored purple. You can change those colors if you want, but it's telling you the wave 3 is still the current wave. So we're still in a wave 3 with Nvidia, and holding above 260 is really impressive. There was, all over the financial networks, people calling for it's way overbought. Nvidia needs to come down. It had this big run up here from 240 to 260. I think we could have seen a move down to 240 and tested that 50-day moving average and been fine. I think we still could do that if Nvidia doesn't hold 260 and comes down. It's got a lot of support, not that far behind at 240. But right now it's trying to hold 260, although it is below the 10-day moving average. So Nvidia looks good, pretty impressive consolidation here following that. A bit of an almost kind of a what would you call that? A triple top? Would you call that a weak head and shoulders pattern? But you can see there that it does look like something is getting ready to happen out of Nvidia, but it's not a lot. It's just 20 points. And is that the move from 260 to 240? Or is that the move that goes from 260 and breaks back above 280? So yeah, Nvidia just continues to impress. Kind of a bit of a doji today on the chart. So we've had a nice move to the upside here. We actually have a strangle on this for our alert subscribers. And you can see the breakout from the triangle, the test of the breakout, and then we've been moving back to the upside, albeit when you have a breakout and a test like this, which is, I usually talk about there's three primary ways that stocks can break out of triangles. One is this, where you break here and move back. And the other one is you just kind of take off out of a 45-degree angle. And then the other one is you can get a vertical breakout, which gets retraced. You don't necessarily want those vertical moves. And here's a perfect example of it right here on Amazon. That vertical move, what happened? Didn't hold, came back down. So you don't really want to see that one. But with this, you need to have it start to power back to the upside. It is above 100, and that's key. So I think as long as Amazon stays above 100, you can stay constructively long there. But as you said, Dux, with that earnings on the horizon, everybody's going to be watching that. There are signs in the retail sector. You probably have noted or heard on the financial networks that some retail sales have been not so hot. So is that going to affect Amazon? You know, one of the biggest consumer stocks that exists out there. Very well could. So again, some caution I think is warranted on Amazon into that earnings report. Right. Yeah. When you brought up silver before, and thought about that when we went up and looked at the dollar, and you can see with this movement to the downside here in the dollar, as long as the dollar stays weak like that, I think it's going to keep a bid under these metals. And so you look at silver, we had gotten overbought, big move up. So we came back down today, no doubt about that. But again, we came down from a very overbought condition, noting that even on the move lower today, still above the 10-day moving average. So we didn't even fully correct the overbought condition. We are getting in the neighborhood of that wave 5 target, but it looks like there's more upside to go. In fact, if we can hold 23 here, this could be a good entry on SLV to turn and move back up towards that wave 5 target above 25. The key will be, can it hold 23? If it doesn't hold 23, then it's certainly coming back down to all this area here of support at 22. You know, it held at the end, the beginning of this, the end of last year, beginning of this year, and we moved down, caught itself, turned and moved back to the upside as the dollar began to weaken. So yeah, pretty interesting movements there, and this could be an opportunity, I think, if you watch SLV and see if it holds 23. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.